The rupee pulls back. The rupee, like the markets, has pulled back its losses in 2025. It was up for the ninth consecutive session on Monday, the longest winning streak since January 2024, thanks to those stepped-up foreign inflows and a weak US dollar. The rupee closed at 85 rupees 63 paise against the dollar, up about 0.4% for the day, according to Reuters, which added that the 9-day streak has boosted the rupee as the currency benefited from dollar inflows related to intercompany borrowings and repatriation of corporate profits, which is usual in March, and more on that shortly. On the other hand, some $3 billion has flowed into Indian bonds in the month of March so far. The rupee's appreciation in March has tracked the fall in the dollar index, according to Business Standard, and the dollar index had weakened by about 3.3% in March, which is the highest since November 2022. The sharp gain in the rupee also likely took exporters by surprise, and more on that shortly, prompting dollar sales and adding to that momentum, according to traders who spoke to Reuters, also adding that rupee had now outpaced all its major Asian peers. I reached out to Anindya Banerjee, head of research for foreign exchange and interest rates with Kotak Securities, and I began by asking him how he was reading not just the rise in the rupee, but the sudden and almost dramatic jump in its value against the dollar in recent days.
This has a combination of global factors as well as seasonal factors. Global means that if you look at the US dollar index, since I would say early Feb till the bottom it made last week, it was a move of almost 7%. So the dollar index depreciated by 7%. Rupee had to play a catch up. Second, if you look at the FPI flows in the Indian market, so if we segregate that into equity and debt, equity has seen a less of selling over the last 1 week or 10 days, and debt at the same time has seen a remarkable increase in investment. So that's factor number two. Factor number three, this is the financial year end, and we tend to see a lot of selling from corporates, especially the exporters. So what has happened was that when the Indian rupee was depreciating against the US dollar and it was around 88 levels, the market was expecting it to keep on depreciating and head towards the level of 90. So a lot of the exporters had not hedged because the overall forward premium is not that enticing enough. And that's the reason why when it's reversed, now we are seeing a lot of exporters coming into the market and doing panic selling. So all these three factors have contributed.
You talked about dollar, and I'll come to that in a second, but the rupee has also been amongst, if not the best performing in emerging markets in the last month. So what explains that? Because the dollar weakness, of course, is keeping everyone stronger.
Right. So if we look at a slightly larger time frame, so in early part of November, so let's say around first week of November, we were around 84. Then we went to 88. So we suddenly became from one of the strongest currencies to one of the weakest currencies in just 2 to 3 months. Now, what has happened is it has tried to play a sort of a retracement move. So from 84 to 88 and back to 85 half. Yes, if you compare the Indian rupees performance over a month's time frame, we are the best performer. But if you take quarters time frame, we are doing around the average.
We're recovering lost ground. And the dollar itself, which is, of course, weak because of, reasons back home and uncertainty around business, around tariffs, and so on. Are you able to see any other trends in the way the dollar is moving?
What has happened was that initially the market was taken on the wrong foot when Trump went with the tariffs hike against Canada and Mexico. But the flip-flop from Trump, which he did quite a number of times in the first term, actually led to a situation where they started to trim their risk premium in the market. So that's the reason why we saw a lot of the long positions in the dollar got unwound. So it's more of trying to price in the worst and things don't turn up as per expectations. So they start to trim down the bets. So that was the overall situation in the dollar index. Yes, the uncertainty around the US economy because what Trump is or the Trump administration is pursuing, that is America First policy, it will be negative for US economy over the medium term, which means GDP growth will come under heavy pressure because he is also trying to talk about cut down the government expenditure. And now if you trim down the government expenditure significantly, it will have a negative impact on growth. And that's the reason why that has also played on the US dollar. That has also played on the US bond yields. Because if you look at now the 10-year yields or the 30-year yields, they have come off quite a bit. Because now the market is anticipating that the Fed may cut rates twice this year. So all of these things have played their role to bring the dollar index down.
If I were to go back to the point that you made earlier about equity and debt investments from foreign portfolio investors, now they do, of course, operate slightly differently, as an equity and debt investors don't necessarily work on the same clock. What is driving debt investments right now at the level that we are seeing and versus equity, let's say, which has definitely come back after a long gap, but it's still stable?
See, actually, there are three factors. First is that the overall inflation in India is continues to be lower. Second, the liquidity situation has improved quite a bit over the past few weeks because of the measures which RBI has taken with the OMOs as well as with the swaps, the FX swaps. So that is factor number three. And third, as I said in the last question, that the US bond yields have come down quite a bit because that helps in the interest rate differential. So all these three factors have contributed to the fall in the Indian that has brought in the FPI flows into the market.
Right. So, how's your outlook for the next few weeks or month, Anindya?
So USD INR, see, over the month of March and April, it tends to do well because of this seasonality. But as we look beyond the next 2 months, I think globally the trade war is far from over because Trump administration is very serious about the America First policy this time. And that means you can't have an America First policy and globalization, or let's say, an open trade between China and America. So, which means that in the coming months and quarters, we will see the trade war intensify between China and America. And when it does that, the emerging market currencies can come under pressure. So, this appreciation in the Indian rupee may sustain for a few weeks. But if I look into the next few months and quarters, we could again see the Indian rupee depreciate.
Right. Anindya, thank you so much for joining me.